Everybody, my name is Tom Clark. I'm the 2020 SAR president, and welcome to our fourth Zoom roundtable. We have a few distinguished guests as we've become accustomed. We've got Nathan Gordon, who's Washington Realtor Government Affairs Director. We also have with us right now, we have Jane Larson, who's with STCU. She's the Business Development Officer at Spokane Teachers Credit Union. And in a few minutes, we'll have Bill Clark, who is the Washington Realtor Policy Director. And so we're using the chat format again today. So if you haven't emailed your questions in to Darren, please use the chat button. Hello. No, now he's Tom MacArthur. Oh, there he is, Darren Watkins again. Bill, you're Darren Watkins. How are you?
Very good. Darren and I have switched personalities.
Well, we were going to suggest you switch chairs, but apparently that won't work either. Anyway, thank you very much for being here, everybody. And with no further ado, let's let Darren take it away as our moderator today.
Thanks, Tom. So today we're going to talk about a couple of key areas. We're going to talk about pandemic unemployment insurance, and that thing, as you know, that program officially starts tomorrow. We're also going to talk about the payroll protection program, which in fact does work for independent contractors and how that works. Got Jane Larson here to talk about that. And we'll take questions. Again, if you have questions, please use the chat function. We're not using the Q&A function. There's too many people that get on the call. And we'll go forward. So Jane, we'll start off with you. A bit of a change this morning in that the program was announced that it's essentially out of money. What happens next? Are you still taking applications?
Yeah, that's a great question. Yes, we are absolutely still taking applications. What we're anticipating is that we're hoping another round of funding is going to be coming through. So right now there's a bit of an impasse, and Democratic and the Republican lawmakers are trying to come up with what that number is. I think they both want more funding. It's just a matter of what that funding is going to look like. So at this point, what we're doing here at STCU is we're continuing to take applications. We're continuing to verify that information, to put it in our system, to get it to the approval state, to get everything ready to go and teed up so that when we get the green light, if we get the green light, which we're hoping, then we'll be able to transmit directly to the SBA, and all of those applications be ready to go. So that is our plan, and that's what we're looking forward to doing.
Has this been a difficult process? Have people been able to access it fairly easily? Do you get a lot of questions? How's it work?
The challenge that's happening is that people aren't really uploading all of the information. I think it's a little bit of a panic mode out there, especially because you were getting the announcements that funding was drying up, and people thought, well, if I just get my application in, it's going to stamp it and then I will move forward. Unfortunately, that's not the case. You really need to have a complete application before we can start working it. So it really does slow down the system when you have incomplete applications, because then somebody has to stop, review it, email you, wait for information. So the best practice in this case would be get your application completed and submitted, and then allow it, whatever financial institution you're working with, for it to sail through pretty easily is what their goal would be.
And that's an important point. I mean, even though this is a federal project that was handed over to the Small Business Administration through the states, it really, at the end of the day, it's about an individual lender on this program. And so help me understand that. Do I have to be a STCU customer? Is it preferred? Or tell me how that works out.
You do. With most institutions are requiring that you are a member or a customer for the primary reason is the know your customer, right? We need to identify you, you need to be a customer, we need to have that relationship. So we have been opening new relationships. We're one of the few financial institutions that still has branches that are open. You can still walk in, not all of our branches, of course, but you can still go in. You can go into a branch, open your account, bring your identification, get your member number, because that is important, and then you would be able to apply for the PPP application. I think you're on mute. I'm not hearing you.
You had some PowerPoint slides with some good information to present. Did you want to do that now?
We can do that now. Some of it may be more detailed than what you want, so I'll go through it quickly. If there are questions, we can throw it in the chat. So I'll try not to bore you with all of the details, but love to at least get some of the information out there. So again, my name is Jane Larson. I am the STC Business Development Officer. Part of my role of what I do is I work with businesses kind of on the community relations piece. We want to make sure, and it's a new role for STCU, we want to make sure that we are doing what we can to support our small businesses and our mid-sized businesses. So I'm new, this is a new role and looking forward to it. And as I was saying offline a little earlier, since I've been hired, I've now become a PPP program expert. So other duties as assigned. So we can go ahead and go on over to the next slide. Really, so like we talked about already, the current status, first $349 billion that was appropriated for this, it was basically gone in a week. The SBA processed over 14 years worth of loans in 14 days. It's unprecedented, the amount of rallying that the banks have done to get around this in the SBA, how quick they have moved. For this group, I think probably want to talk about the eligibility. You know, basically it is a payroll protection program. And so it is designed to keep people working. Now, sole proprietors and independent contractors, I know many realtors are at that organizational level, so they are eligible. And we just got some further guidance the other day, and we'll talk about that a little bit as to what they need to provide as a sole prop, as an independent contractor. So the dates to apply, employers started April 3rd, independent contractors started April 10th, and then it was about April 15th when SBA shut the doors and said our funding is out. So we can go to the next slide. All right, so the important consideration here is what are payroll costs, right? Especially if you're an employer. It is salary, wages, commissions. You can also put in employee benefits such as your healthcare premiums and state and local taxes on wages, okay? For a sole proprietor and independent contractor, you can look at your wages, commission, income, and primarily what we're looking at is your net earnings from self-employment, and it's capped at $100,000. We can go to the next slide. So how do you apply? Each bank is a little differently. We have a system or a portal where you will go in, you will log into the system, and you will upload your information. And you are basically creating that SBA application when you're in the system. There's a number of certifying questions that people need to answer, you know, such as, you know, do you have a felony? Have you defaulted on government guaranteed debt in the last 7 years? And those are different certifying questions that the SBA will use to see if you're eligible or not. So the important thing is everybody, whether you're an employer or you are a sole proprietor, you need to make sure you have your formation documents on hand and have those ready in a PDF to upload. Anybody who's an owner of 20% or more also needs to be on this application. So you want to make sure you've got their social security number, their driver's license. And as I said, SBA, you won't have to complete a paper application at this standpoint for STCU, but many banks are requiring that. So check with your local financial institution. So if you're an employer, you need organizational documents, bylaws, articles of formation, your certificate of formation if you're an LLC. And really the important thing is your 940, which is your annual wage report, or your 4 quarters of 941s. We are required to verify the amount of payroll that you have. It's not just hey, I did this amount of payroll, let me get 2.5 months worth. You really do need to have some supporting documentation there. We also, one of the rules about the PPP is that you have to keep people on the payroll. That is the point of this. It's payroll protection. So you need to spend those funds within 8 weeks of the funding of your loan. And so part of that forgiveness, and we'll talk about forgiveness in a little bit, is that you've kept your employees on staff. Okay, so, and you will need to document how you've spent the funds. And I have a slide later that goes through a little bit of forgiveness, because I think that's an important piece that people are maybe forgetting about, that it's not just apply and you get the money and you're done. There's going to be some paperwork required to have your loan forgiven.
Jane, I
So
think it's important, especially for realtors, to note that
Yeah.
your company can be a company of one yourself.
Right, right. It can be. And let's go to the next slide, because I want to talk a little bit more in depth, because I know a lot of realtors are independent contractors, or they may be filing as a self-employed individual. If they were filing as Schedule C. So for you, what we need is we need a copy of your business license. If you're getting 1099 income, we're going to need that documentation. But most importantly, and this rule just came out like 2 days ago, the SBA is requiring a 2019 Schedule C, okay? Even if you haven't filed your taxes yet, they still want you to file the Schedule C. So the question has come up, and I've talked with a couple of CPAs, it's like, well, what if my Schedule C, because not all of it, if you haven't filed yet, you haven't gone to your CPA yet, it may be a little off. We actually don't know the answer to that question. I think as long as it's your best effort to file an accurate Schedule C with your PPP application, hopefully it's going to be fairly close to what you actually file in your tax return. So for a sole proprietor, you need that Schedule C. And in there, we want to see your wages, your commissions, and we want to see that net income. So if you were paying, for help on, whatever costs that you normally deduct, we are looking at that bottom line. And again, wages are capped at $100,000 annualized.
Hey, Jane, if I could ask you, a lot of our realtor members are actually have formed their own personal S corp. They don't have a Schedule C. What would they do in that case?
So we would want to see their S corp net income. We want to see that return instead. Okay. Let's go on over to the next slide. Okay, we've touched a little bit about this earlier. When you're applying, make sure you have all of your documents scanned and ready. So most institutions have a list of what they're requiring. Have those ready to go. And make sure you provide all of the information that your financial institution is requesting. Don't hit submit until you've uploaded everything. If you are claiming other payroll costs, such as healthcare premiums or unemployment taxes, you basically need to break it down for us. Don't assume that your banker can read what you have input or how you've come to your number. So give us an accounting. $35,000 was for wages, $1,600 was my healthcare, employer paid healthcare portion, $800 for state taxes, and add that up for us. So when you say you're applying for whatever that adds up to, show us the math, show us how you got there. That will save your application from being put aside and reviewed. You also need to supply some supporting documentation. So if you have healthcare, you need to give us a listing of those healthcare premiums. So add it up, make sure the numbers work, and supply the supporting documentation. If you have questions, your banker may know some information, but we're not really experts in this, and we're certainly not experts in payroll. So I would definitely run it by your CPA or your accountant too. And I put a resource down there. Boy, treasury.gov is a great website. They have all kinds of information on there. This program is being managed by Treasury and SBA. So lots of great information on there. All right, next slide. So there's been a lot of misunderstanding out there. People think that because you hear that you can use your proceeds from this loan for things such as interest on your mortgage obligation as long as it was incurred after February 15th, for rents as long as that lease was in place before February 15th, for utilities. What people are sometimes doing is they think that they can include those costs in the loan to get forgiven. No. What you're looking at is your actual payroll amount. but you can use about 25% of that for things such as mortgage, lease, utilities. But it's a little bit of a double-edged sword because remember, you have to keep your people employed. I think you have to keep about 90% of your employment. If you're a sole practitioner, that's not an issue. But that's what we're running into some questions from some of our employers.
And one of the questions we got from our members that we had written in, I can share with you, was what's the date that we should be using? I know that we've got the date of around the 17th or 18th when the governor's order came out. A lot of these have to do with issues happening before February 15th. For applying for this loan, what date do you recommend us putting down as being affected by the coronavirus issues?
Our application process doesn't require to date when you've been affected. Basically, our application process, part of our process is to verify that you've actually been in business since January through, I think February 29th is the period that we're looking at to make sure it actually is an ongoing concern. But we don't have a date as to when you've been affected.
Okay, and then the last one, this is a unique one for realtors, is that, so for many, the business license that they hold as a realtor is actually hanging on the wall of their brokerage office. And yet most of those offices are closed and people are working from home. Is that the license that we need to supply when you're looking for that business license, or have to figure out a way to get a copy?
Usually you can go to DOR and get a copy of that. So if you just go to Department of Revenue, you can download a copy of your business license.
Sounds great.
Right.
And
Okay.
last advice for us, do you think we should, as realtors, if we haven't taken advantage of this program, to apply right away?
Yeah, I would definitely go ahead and apply. Make sure you've got all your ducks in a row. Apply. I did want to add one last best piece of advice. If you end up having a banner year and it comes back in the SBA saying, wait, why did you apply for this? You had a great year. Why did you apply for this forgiveness? You may want to document. It's like, hey, I have articles saying that housing is crashing. Housing's going down. We don't know. So you need to maybe document some of the uncertainty around the industry to make sure you've got that for future use. Secondarily, I said I was done and I wasn't. You have to document where you spent this money. Some people are opening a separate account so that they can easily track how the money was spent. You need to document where the money was spent and how it was spent. And you will be required to submit that documentation in order to be eligible for forgiveness. So there will, again, more work to be done down the road.
Sounds great. Jane Larson, thank you for joining us this morning.
Thank
And
you.
Tom Clark, I know that you have been putting some numbers together about the impact of business. You shared with me this morning something on lockboxes. So maybe that's some information that our applicants could actually use. You need to unmute there. Sorry about that, sir.
Jane, I have a question for you, if you don't mind.
Go ahead.
Is there a contact number for you, Jane, if someone has a question?
Yeah, it was on the end of my presentation, but I will go ahead and give that to
Oh.
you. My contact number is, it is 344-2167.
Perfect. Aha.
And that is my email address at janel@stcu.org. And we do have quite a pipeline of applications. So if there are no further questions, I think I will drop off. I wasn't monitoring the chat. Was there any?
Hey, Darren, could I pose one question to Jane, since we have a lender that might be helpful to us? Jane, I'm Bill Clark. I'm over in Olympia, so I deal with a lot of the realtors around the state. And the issue of business licensing has come up because what a lot of realtors have is they have a real estate license from Department of Licensing that shows that they passed the real estate test, but they don't have a business license from the state of Washington or the city. They don't have their own UBI number. And so when you say business license, are you saying a real estate license, or are you saying a business license that's the state UBI number?
Usually a business license. I wasn't aware of that. I thought realtors had to have a business license, even if they were working under a broker. Is that not the case?
That's not
Not
the
the
case.
case.
Okay. I would maybe put their realtor license along with them with their Schedule C, and then their institution. The challenge with this program is that there's not a lot, it came out so quickly, there's not a lot of guidance given on specifics to each bank. So each financial institution may be having their own rules. I know for us that has been a requirement, but we're also trying to look at it as a sense of, does this make sense, right? We don't want to get hung up on a requirement if it doesn't make sense. So I'm sorry to kind of be evasive on that question, but I think it's going to be case by case.
Right. Okay.
All right.
Thanks, Jane.
Okay, thanks. Let me call me if you have any other questions.
Will do.
Thank you.
Thanks for your time here, Jane.
Thank you very
Thank
much.
you.
We're going to switch gears now and jump over to our state folks who have joined us here. Nathan Borden and Bill Clark have both been very closely, probably more closely involved in the issues regarding everything from pandemic unemployment to being essential. And thanks for joining us today and taking time out. You guys have certainly been working overtime these last couple of weeks, trying to keep our industry afloat and working. So let's start with you, Bill. You've had a chance to work pretty closely with the Employment Security Division to talk about how this is going to be implemented. And we understand it kicks off tomorrow. Is that right?
I think that's right. So, generally this is the PUA, or Pandemic Unemployment Assistance, which was also part of the Federal CARES Act, but it's implemented at the state level through the state agency that deals with traditional unemployment insurance. So that's Employment Security here in the state of Washington. The PUA program is different from normal unemployment insurance in that independent contractors and self-employed people are eligible to apply. So traditional unemployment is if you're an employee of a company and you're laid off, that employer has been paying into the unemployment system so you can draw unemployment insurance based on that. Independent contractors aren't eligible. So that's what the CARES Act provides, is that eligibility to apply. Now, there's some things people should note about it. One is we're trying to integrate this federal law that provides unemployment compensation, the PUA, through a traditional state unemployment system that only applies to employees, not independent contractors. So it's been a bumpy ride. It's going to be a bumpy ride to implement this program. At this point, the way that ESD is implementing the program is, in order to establish eligibility for the PUA, you first have to establish that you're not eligible for traditional regular unemployment. You do that by applying for regular unemployment and then getting rejected. By getting rejected for regular unemployment, you thereby become eligible to apply for the PUA. One mistake that we've seen from a lot of realtors is there's a section of the application process when you apply that says, have you worked 680 hours in the prior period for your employer? And then you can click on this field and there's a list of employers. A number of real estate brokers, even though they're self-employed as independent contractors, are checking that they worked for their brokerage. Technically speaking, they did not work for their brokerage. Employees would have worked for the brokerage, but an independent contractor does not work for anyone other than themselves. So when realtors fill that out, they should not check that they worked for their brokerage. They should check, no, they did not work for an employer for 680 hours. That results in a denial for regular unemployment that thereby enables them to apply for the PUA. So that's a tricky issue that is unique to the real estate industry and a few other industries as well. It's been about 2 weeks in the making for Employment Security to create the kind of PUA specific process for independent contractors. They believe it will be up and running on their website by tomorrow, if not at least by Monday. And so that will involve a number of things, and we'll find out exactly what those details are when they roll out the program, but they will be things like verification of income based on your 1099 or based on your tax return, the extent to which you are unemployed at this point or underemployed. That is, you could still partially be working, but if your income is so drastically reduced, you still could qualify for some level of those PUA benefits. So they're going to have to do some sort of income verification. And for real estate, that's going to be a challenge because of the cyclical nature of real estate and also because of the time lag, right? If there are people who are getting paid in April, or will be paid in May, but that's for work and transactions they did in February or in January. So there's this time lag. Those are the kinds of things we'll have to work with ESD on. I've talked with them about doing a kind of real estate specific webinar for the PUA program, just because we have all sorts of pretty unique situations. Once their system is up and running, we'll take a look and see how it functions for our members, and then come up with kind of detailed questions and answers and a FAQ document, and then try to work with ESD on some sort of realtor specific webinar, probably end of next week or the following week, keeping in mind that unlike some of the SBA programs that exist just for a few months, the PUA program exists through the end of the year, right? So the PUA eligibility goes through December 31st, 2020. And the thing I want to stress is, even though you're eligible to apply, there's no guarantee you're going to get benefits, right? It's like, I tell my daughters, you're eligible to apply to go to Harvard. Now, are you guaranteed to get into Harvard? No, there's certain qualifications to get in, just like there are going to be certain qualifications based on income and the amount you're working and things like that, that you'll have to complete. And so if in a normal year, let's say you made $120,000 a year and your income is cut in half to $60,000, don't expect to be eligible, right? You're still, even though your income has been cut in half, you still have income. You're not technically speaking unemployed. A second issue, a question I've got, a couple of them that I'll just note before I get it anyway, is if you've applied for PPP funds and you're going to receive PPP funds, don't expect to get PPP funds and the PUA, because as noted in the prior presentation, the PPP is for payroll. If you as an independent contractor receive PPP, that's for your own individual payroll as yourself. You can't both pay yourself and claim to be unemployed, right? So there'll be some interactions between these programs that we're going to have to sort out, and it's going to be kind of a bumpy ride. So we'll see how it goes the next couple of weeks, but we're trying to come up with kind of, real estate specific guidance for everybody to look at, hopefully by early next week.
Bill, one of the misconceptions that we heard early, and I've actually heard it repeated, was realtors a lot of them are of the opinion that because you are able to get them declared essential, that they're really not unemployed. Can we talk a little bit about how for independent contractors, it doesn't necessarily hold true that you have to be 100% unemployed. It can be partially, or maybe your wages are only partially affected?
Yeah, so the fact that real estate brokerage services can still be provided doesn't make realtors ineligible to receive PUA. There are a few folks I've talked to who are, for various health reasons, high risk. So even though they could provide real estate services, they've just said, I'm not going to do it. I'm not going to go to a property. I'm not going to interact with anybody. And so they're effectively inactive for the next few months. So even though they could work, they're not going to, right? The other situation is if your level of activity is so drastically reduced, even though you could provide real estate services, if the market is so slow that you functionally have no income, the fact that you could provide real estate in and of itself won't make you ineligible.
Is there anything on an association level that we should start trying to gather? For example, we've noted that there's about a 20% reduction in the number of locksbox openings and things like that. Are those things that are helpful in making these applications, or what can we do?
That's a good question. I would say let's do this. We have a good, kind of source and pipeline into ESD in terms of how they're implementing the program. I think we should see what their kind of independent contractor specific process looks like when it's rolled out over the weekend. And then by early next week, as most people start using it, figure out what kind of information we can provide, even if it's a standard, if it's by local association or by state association, so that when that application goes in, it's kind of flagged as a real estate broker application that may need kind of specific consideration. Yeah, let's wait and see what their program looks like over the weekend, but we may get back to you on that one.
Thanks, Bill. So let's roll in Nathan now. I'd like to really have a conversation, if we could, about how this process has gone. I mean, I realize we were just sort of winding up the end of the legislative session, and you guys' hard work was done for most of those months, and all of a sudden now it's all hands on deck. Please help our industry survive. Nathan, how's that process been, and what's it been like the last weeks?
Yeah, the first month of interim is usually kind of making up for the prior very busy session, and we didn't exactly get that, but that's all right. I'd rather be in this position than what many other people are in, not having a job. So it's been a pretty busy last 30 days for us. We were talking to the governor's office as he was putting together the original order and working with him, trying to make our case about why we thought that we were essential. That original order did not include real estate activities as essential activities. And so we went to his chief of staff and said, we're really disappointed about that. What we'd like, though, is a direct pipeline. Will you assign us somebody high level within the governor's office who can be our liaison, who we can come to with questions, and when we need clarification, we can get that. So he did that. And very quickly, we started talking to that person about what we thought was a proposal that would meet CDC recommendations, using social distancing, keeping everybody healthy, and still keeping some real estate activity moving forward, really focusing on pending sales and making sure that those sales that were in the pipeline could get finished, with an eye towards especially people who, for whatever reason, a death in the family, which we're seeing right now, medical challenges, divorce, things like that. People who just had to list their home for sale could also do it. And so they got back to us, frankly, fairly quickly. And that was when you saw that expanded order and expanded authority for real estate brokerage services. I think one thing I'll note is early on, we worked with leadership, and we had a few folks in a few of our local associations, not Spokane, but a few others, that were wanting to do a big call to action and, write op-eds in the newspaper and really push the governor on us being an essential service. And our strong advice to leadership, which they took, was that we would do this behind the scenes and we would do this quietly. Calls to action, I think, can be good when, you have a group of 50 people and you need to convince 10 of them to move your way on something. Right now, it's an audience of one who is making decisions. And most governors, and I would say especially this governor, doesn't like to feel like he's being put, kind of pushed into a corner. And so that's why we decided not to kind of go right to the public and not to do a big kind of loud call to action on this. And we think that it's been fairly successful. So, once we got that expanded authority, then other industries started using that new interpretation, and they were contacting the governor saying, well, what about us? What about us? What about us? I would include stagers in that category. Again, we weren't lobbying for staging to be included as an essential activity, but we got this new authority for real estate, and the stagers saw that. And we had staging companies contacting the governor's office saying, under this new authority, we think we fit and we can work. And so I know the governor's advice to a number of staging companies have been, yes, under this new authority, you are allowed to work. Movers, I think, are under that same banner. Again, we didn't necessarily advocate for moving companies, but they advocated for themselves. And again, the governor's office has indicated to moving companies that they can go ahead and work. So that has been sort of where we've been the last, I would say, 3 weeks. We did just this morning, we were asked by the governor's office to submit a letter that envisions maybe some opening up of the economy slowly, and what we would like to see if, as they were considering removing some of the restrictions. Again, the governor's been very clear. It's not like a switch that you're going to flip on and off. It's more like a dial. And so as they ease back, are there some things that we would like to see happen? So we submitted a letter just a little while ago, and we are asking for commercial real estate to now be allowed on parity with what residential real estate is seeing. We're asking for the governor to increase how many people can be on site from 2 to 3 people. Not a huge increase, but I think that some of the feedback we're getting is that that would be helpful. And we've had a few other requests in there. We're also joining with our friends, the builders, and asking the governor to consider residential construction, especially construction that's already under contract. And we know there are a number of new construction single-family residences that are, 80 to 99% complete and need another 2 weeks of work on them, and then they'll be done. And in line with that, we're also asking for any sort of government functions that are necessary for that new construction to also be open and going to work, so that counties can go ahead and give like a COO if needed, things like that. So that's kind of where we're at. My guess is the governor has asked for all of this input from different industries by middle of next week. My guess is we'll probably hear end of next week, either probably a week from today or maybe the following Monday, where the governor is intending to go. So I think that's kind of where we're at. That's kind of the history. Happy to answer any questions.
In the last 24 hours, we've seen the governor's announcement talking about new rules on landlord tenants. Did we play a role on that, or what was our place?
Yeah, good question. That was unique. We were given a heads up about 3 hours before it went into effect. We were told, here's what he's thinking about doing. Your input is welcome, but the governor wants to put this in place later this afternoon. And then literally within 3 minutes of the new proclamation being made public, there was a Seattle Times full story about the proclamation. So you put all that stuff together and it was sort of cooked, right? I mean, the governor was going to do that. It was based in large part off the large number of complaints the attorney general had gotten from people thinking that their landlord wasn't following the prior order. And I know that there's kind of 2 sides to every coin. There's 2 sides to every story. But there were enough complaints and the governor felt like he had to do something. So, that one was one that was kind of cooked before it got to us.
So there's a lot of things still left on the table, a lot of changes coming up. Almost every day it seems like there's a new program. But now we're hearing word that we may even see a full legislative session come back. What do you know about that?
Yeah, I mean, I don't think we're going to be able to get through this whole thing without a special session. The legislature set aside, I want to say, $2 billion out of the rainy day fund. And the last I heard, maybe they'd been through about 1.4 of that. I think that's the number. So we think that they will come back at some point, but probably not in the next 2 weeks or 3 weeks. I think that's going to be in 30 to 60 days. They're still trying to figure out what impact this is going to have on the budget. And it's going to have a big impact. We know that. But they want to get their arms around that a little bit more. We are putting together sort of a list of asks that we think we might have if the legislature does go into special session. But it would be, if they do go into special session, it would be fairly quick. And they would go in with sort of a predetermined agenda of the things they were going to get done. So we're trying to work to make sure that, an ask or two that we may have is on that agenda. And this is where our members can play a role. If you guys have an ask that you think we should be considering, please let us know.
Bill Clark from the PAL. On a policy position, is there any policies or issues that you think might come up that would be of surprise, especially in light of what's happened during this COVID crisis? For example, I can think of a number of things like rent control or cause evictions or things like that nature. Are those ancillary issues that we expect might come up as a special session?
Well, I think they could come up. I mean, I think Nathan's right that I don't see anything in a special session popping up in the next couple weeks, because in part, I think the next full revenue forecast they'll get will be early June. And so early June, they'll kind of know, here's how bad kind of March and April were, and it kind of gives them a good projection going forward. So, you know, it could be more like in the July to September timeframe. It wouldn't surprise me if you see legislation making certain changes in some of the executive order subjects. You know, utility disconnections is one, rent control is one. The legislature can certainly pass laws that might be in existence for 2 years, you know, recognizing the fact that there's going to be this long recovery and impacts to certain economic sectors for a certain period of time. So that wouldn't surprise me, but I think the main focus will be kind of just budget and kind of revenue items. The other question people typically have is, how long can the governor keep issuing these proclamations for? By the Constitution, they're in effect for 30 days. After 30 days, they can be extended by the legislature. If the legislature is not in session, then the 4 legislative leaders, the leaders of each caucus, legislative leadership can, by the vote of the 4 of them, extend those executive orders as well. So I think that's likely to happen until the legislature is back in session. But the main issue is going to be revenue, because I think it'll be, you know, in the multiple billions of dollars of impacts now and going forward. So.
And Tom Clark, I'll bring you in on this. What issues do you think we need to be asking these folks about what we could do from the association level, or what kind of support or things do we need from these fine leaders?
Well, you know, you've already mentioned it, that you want our input, which I really appreciate. So our members can email you on the comments at Washington Realtor. Is that correct?
Yep, that's right. We get those. Those come right to us.
Comments at WashingtonRealtor.com. And so if they have a question or a concern, or they want you to throw some energy one direction or another, they can voice their opinions, their thoughts.
Yeah,
I think that's a big deal. I'm sorry?
WaRealtor.org. Comments
thank
at
you.
WaRealtor.org.
Comments at WaRealtor.org. Thank you. You know, I see this as being multifaceted. Obviously, we've got National Association of Realtors, Washington Association of Realtors, ourselves, and then all the way down to the individual independent contractors. So there's just a lot of moving parts, and I think things change. One of the questions that came up here just a minute ago from one of our members is, you know, once the PPP or the unemployment issue opens up on Monday or whenever it's going to, is there a possibility to revisit some of these questions with you gentlemen on midweek to see what some of the challenges are and how our members might get around them, you know, or forge through them based on experiences that have been taking place over the first few days of this new world we're in.
Yeah, and I'm sure we can do a follow-up to this, and then we'll certainly be doing, like, you know, state association wide stuff or stuff with individual locals as that's needed. And yeah, like I was getting at, there's a ton of interplay between these different programs, and, you know, you could apply for PPP and get rejected. You could apply and get accepted, but there's no money. So does that open up the door to PUA? And there are all these kind of interplays. We're going to have to figure those out.
Right. Yeah, and it's a moving target, I'm sure. Things are going to evolve and I would imagine the banks and SBA, they're all going to be changing their guidelines as they go based on what they see as some of the challenges. Is that true?
Yeah, I mean, I've been in contact with the Community Banks Association to try to understand how the banks and credit unions are dealing with the PPP program. And some of it's a combination of, there are certain requirements under the CARES Act, under federal law, in terms of how the individual lenders can administer the programs. And then individual banks kind of have their own requirements too. And so you'll have different standards with different lenders. And and different lenders have been given a different allocation of the available funds per state. And so one lender may run out of money quicker than another one. And so they're all just like our associations working together, the banking association is working together because they're trying to get the funds out as quickly as possible. So same with local governments. We've had a lot of discussions with city and county associations about getting building inspections done, getting septic inspections done, building permits, stuff like that. So yeah,
Sure.
crazy time.
Well, yeah, and another one that came up last week in a forum that I was on was regarding septics, because we can't get a perk test done. We can't get somebody out on site to dig a hole.
Right.
And, that's social distancing at its finest with one guy on a backhoe or something like that. But so there's things like that we could ask the governor to loosen up. And I don't know if you guys have that on your list, but that's something to maybe consider.
Yeah, we included that, and that's sort of under that residential construction, right? That's kind of considered as sort of an affiliated piece of that residential construction piece.
Good.
So that's in the letter. That's something that we're asking for.
Yeah.
Fantastic. Well, we're getting towards the end of our time that we asked for. I'd like to go around the group one time and just any last comments. Nathan, you're up to bat. Why don't we start with you? Just any final thoughts here as we wrap things up.
Yeah, absolutely. I want to thank you guys for being on and for your patience as all of this stuff unwinds. We've gotten a lot of communication from our members, and sometimes it takes us a little while to get back to you. So we appreciate that. And let me tell you, from the CEO on down, we understand what this is doing to our membership, which is made up almost entirely of independent contractors, and that this is a very challenging time for you guys. So it's been a busy month for us, but I try to keep in mind that hopefully the work we're doing allows you guys to keep doing some work as well. So keep the questions and comments coming. We appreciate you bearing with us as it takes maybe a little additional time, a little more than typical to answer your questions, but keep them coming and we'll keep wading through them.
And Bill, your turn. What's any final thoughts or comments here for us?
No, I would disagree with Nathan. These programs are brand new. They're trying to, get them going as quickly as they can. So it's a little bumpy, but just, if you have questions, send them our way. Some of them we send on to NAR. Some of them we'll figure out ourselves with the state agencies or with the governor's office or others. So we'll just keep working on it. So hang in there.
I will say, just as a housekeeping measure, the emails that you guys send out, not only are they timely, but in many cases they are announcing or putting information out that people didn't have that was available. And I just want to say that to keep up to speed on things, make sure you open those emails that you get from Washington Realtors. And then of course the best website that has all your reference material on it is at washingtonrealtors.org/COVID-19, which I think is a great site for reference. We've got those links on our website at all for SAR. And Tom, if you'd be so kind as to wrap us up here.
I can do that. I think some of the concerns that the members have had lately, and there's maybe you guys want to chime in on this. I don't know. I'll try to be brief, but the 2 people on site issue has been huge, where I constantly am hearing one realtor say, gee, I went to buy my listing and there were 4 people standing on the porch, or there was 1 on the porch and 2 walking around in the backyard. And the 2 on site versus 2 people, 2 people in the property or in the home, if you will, it seems to be tripping some of our folks up. And some of them maybe aren't paying attention, and some of them, I think it's an education process more than it is a corrective measure. But we've been encouraging the realtors to talk to the designated brokers who can talk to the other person's designated broker, or if they don't feel comfortable talking to the realtor themselves, in order to educate rather than to penalize. Does that make sense? I mean, do you know what I'm trying to say? Mm-hmm. So it's kind of a big deal, and if some of us are playing by these rules and others are playing by other rules, it makes it difficult for everybody. So I've found that in my business, the hardest thing for me is to educate my clients to take this serious. No, I said 1. 1 means you stay in the car. And I have to just put my foot down, and that's been difficult.
Yeah, and we appreciate you guys playing by, doing that and taking this seriously. I mean, keep in mind, probably other than the hospitality group, realtors probably have gotten the biggest allowance since the stay home, stay safe order went into effect. And so we want to make sure that we're honoring sort of the commitment to that. So, we get it, and we know that it's frustrating. Like, a husband and wife look at each other and say, well, we're at the house together all the time anyway, so why does it matter? And, it matters because people are watching. And the last thing we want is some news report that says, realtors aren't abiding by what they said they would do. And then the governor to maybe revisit that. So I just remind people, builders would love to have the restrictions we have.
Yes, that's very true. Yeah.
So,
and while we look back and reflect on this wild journey that we've had involving all these new programs that have been stood up, all of these recommendations that have either been listened to or not, all these orders issued by the governor, we are literally exactly at 1 month since the governor first made that proclamation. So again, gentlemen, thank you so much for your time. Nathan and Bill, you guys have been on the front lines, and we truly do appreciate the work you've done for us.
thanks, guys.
Thank you, guys. Appreciate it.